Hey everyone, and welcome. Have you ever stared at your payslip and just wondered what it all really means when it comes to your taxes? Well, today we're going to unpack your entire compensation package, from the salary you see to all the hidden perks, to figure out what's really taxable here in Malaysia. All right, let's get into it. So let's kick things off with the big question, right? You see that salary number on your offer letter, but what is your entire compensation package, the whole shebang, actually worth in the eyes of the LHDN? You might be surprised by the answer.
I find it really helpful to think of your income like an iceberg. That monthly salary that hits your bank account, that's just the tip. It's the part everybody sees. What we're going to do now is explore everything that's lurking just below the surface, all those other benefits that add up to your total taxable income.
First up, let's talk about the most straightforward part, the actual money, the cash that lands in your pocket. In the tax world, this is all covered under Section 13(1)(a) of the Income Tax Act, and it's really the foundation for everything else we're going to discuss. Now, this is an absolutely crucial first step that honestly a lot of people overlook. The tax authorities don't look at your take-home pay. They're interested in your gross salary. So let's say you see RM 6,800 in your bank account. Remember, that's after your 11% EPF contribution has been taken out. That means it's only 89% of the real starting number. To get to the full amount that's taxable, we just use this simple formula to scale it back up. It's a tiny calculation, but trust me, it makes a huge difference. And of course, it's not just your base salary, is it? Any bonuses, commissions, travel allowances, even the money you get for unused leave days. It's all considered cash income. And you'll see two other important terms on this list, gratuity and perquisites. Don't worry, we're going to break those down in just a moment. Okay, this slide clears up a major point of confusion for so many people. The rule is actually pretty simple. If your employer pays you back for a business expense, say a taxi you took to a client's office, that is not taxable income. They're just settling a company cost. But if they pay one of your personal bills, like your maid's salary, that is a taxable benefit. Why? Because it's basically cash in your pocket that you didn't have to spend yourself. And that leads us perfectly to the official term for these kinds of perks, a perquisite. Now, the key phrase to lock into your brain here is convertible into money. It means it's a benefit that you could, at least in theory, sell or turn into cash. This specific definition is what makes it different from the next thing we're going to look at. All right, let's dive a little deeper below the surface of our income iceberg. We're now moving into the world of perks that you can't exactly sell for cash, but that definitely have a real taxable value. We're talking about benefits in kind, or as you'll often hear, BIK for short. And this slide lays out the difference perfectly. A perquisite, like your company paying your phone bill, is convertible to money. A benefit in kind, like being given a company car, is something you get to use and enjoy, but you can't exactly sell it, right? It still has a taxable value. It's just calculated in a totally different way. So how on earth do you put a price on using a company car for tax? Well, the good news is you don't have to guess. The tax authorities have a fixed schedule called the prescribed value method. So as you can see, if your company gives you a new car that costs them RM $170,000, the law says the annual taxable value of that benefit to you is exactly RM $7,000, plus an extra RM $1,800 for fuel. Simple as that. But wait, check this out. Here's a fantastic little tip to know. As soon as that same car becomes more than 5 years old, its taxable value gets chopped in half. That RM $7,000 benefit suddenly drops all the way down to just RM $3,500. That's a huge 50% discount just for the car's age. And it's not just about cars. There are fixed annual values for all sorts of common BIKs. A personal driver. That's valued at over 7,000 ringgit a year. A domestic helper? Nearly 5,000. Even the furniture in a company-provided apartment has a specific taxable value. You can see how these can really start to add up. Speaking of a place to live, company-provided accommodation is such a major benefit that it actually gets its own special section in the Tax Act. So let's have a quick look at how that one is calculated. Now, this is a really, really important rule that more often than not actually works in your favor. Here's how it works. The tax authorities calculate two different numbers. First, the actual rental value of the place, and second, 30% of your gross cash income, from that first section we talked about. They then tax you on whichever of those two amounts is lower. So the value of this benefit is capped relative to your actual salary, which is a pretty good deal.
Okay, so we've covered pretty much everything that happens during your employment, but what about when it ends? Let's take a look at those big one-off lump sum payments, like a gratuity or compensation payment.
All right, if you're getting close to retirement and you're expecting a gratuity payment for all your years of service, you are going to want to listen up. There's a very good chance that entire payment could be completely tax-free. Let's walk through the checklist. First question in our little decision tree, is the retirement happening because of ill health? It's a straight up yes or no. If the answer is yes, then it's incredibly simple. The entire gratuity payment is 100% exempt from income tax. End of story. Okay, but what if you're retiring in perfectly good health? No problem. There's another path to that same exemption. You just have to meet two conditions. Are you at or over the retirement age, which is usually 55? And have you been with the same company or group for at least 10 years? And if you can tick both of those boxes, then guess what? Same fantastic news. Your gratuity is also fully exempt from tax. So, for the vast majority of long-serving employees who are reaching retirement, this is a wonderful tax-free benefit. Now, let's just quickly switch gears to another kind of lump sum payment: compensation for loss of employment. This is what you might get in, say, a redundancy situation. The rules are a bit different here, but they can be just as generous. When it comes to this kind of compensation, there is really only one key number that you need to burn into your memory: 10,000 ringgit. Let me show you exactly why this number is so important. Here's why that number is such a big deal. For every single full year you've worked for that company, you get an RM $10,000 tax exemption on your final payout. So think about it. If you've been there for 10 years, the first RM $100,000 of your compensation package is completely tax-free. That's huge. And just like with gratuity, if the job loss is due to ill health, the whole thing is exempt. So as we wrap all this up, I want to leave you with this one last thought. Understanding all these pieces, the salary, the perks, the BIKs, the lump sums, it's not just about doing your taxes correctly. It's about truly understanding the total value of what you bring to the table. Because when you know what you're really worth, you are in a much stronger position to negotiate your next career move and plan for your entire financial future.